Morning, Dima. How you doing, buddy?
Good morning, Will. How are you?
Great, great. What are we doing this morning?
So I think we're going to move on today to look at a stock, and we're going to try to look at some trading statistics for a stock and see if we could get some insights. And if there are any questions, I know we've been taking questions every day. Of course, if you have any questions, let me know. I'm going to try to answer those questions as many as
I
I
will
can.
put the link to the Zoom as well. If you are someone brave enough to come on and talk live, it would be great. I know it takes a little bit of gumption, but we'd always take it. So I'll put the link to the Zoom in the YouTube chat so anyone can come over if they would like to ask live. Sometimes it can lead to more questions when you're asking live as well. Before we start, D, let's go to the disclaimer. What do you think?
Yeah. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
Excellent.
And let's get started. We'll first take a look at what's moving into pre-market hours. I'm going to go over briefly, and then I'm just going to move on and take a stock. Maybe I'll take like a more well-known stock like Apple, and we'll just take a look at the trading statistics for it, see what kind of insights we could get from it, and just what we could learn. So first, let's take a look at the pre-market report. So these are stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm taking a look at the list here. There's about 159 stocks that made our percentage gainers list, 30 on a percentage decliners list. From that perspective, looks more like a bullish bias at the open, like a 5-to-1 ratio. I'm also going to just take a look real quick what's going on in higher market cap stocks. So market cap stocks $20 billion or higher. Here we see 34 on the percentage gainers list, 3 on the percentage decliners list. So from that perspective, looks like a much more bullish bias at the opening. Since nothing's sticking out at me right now that's glaring, so I'm going to kind of move on and just talk about maybe let's pick Apple and look at the trading stats for Apple. And let me know if you have any questions, Will.
Gotcha.
So here I'm going to put in Apple. Let's go to the Apple stock, and this goes to a summary page. And up here, when we default to the summary page, you have a bunch of tabs here. You look at the charts for Apple, trading ideas, sentiment. So you got all these different trading stats. But I'm going to take a look news. I'm going to take a look at the Apple's trading stats. I don't know if we did this page before, so and if we did, it must have been a long time ago. So we'll just cover it today. Up top, when we talk about trading stats, a lot of times you could take a look at the chart, but the chart could just tell you so much because it's just visual, right? You're just looking at lines. So a chart is very easy to find something that's extreme, so you'll see a line where something's extreme. It moves away like a really long line. Sometimes you have news or earnings, you'll have an extreme move, or you could take a look at maybe, a comparison of two lines, moving average and so forth. But statistics kind of help us in other ways, and because we could create benchmarks and we could quantify things. We could put, actual numbers behind it, like the frequency of something happening, the actual magnitude of average moves, the volatility, we could create benchmarks. And this really helps us in other ways and guide us that a chart cannot do, right? Actually quantifying things. So we'll start looking at the most basic statistics we could look at as a starting point, and it could get as complicated as you want or as simple as you want. But let's just start with some basics that you're probably, or most people would be familiar with, and take a look at that first. So here in Apple, we have the price of the stock. We could get statistics on price. We could get statistics on volume. We could get statistics on volatility. These are just upcoming events we could talk about. And then here are some other examples where we just take those stats a little bit further, just to show you, how you could go a little bit beyond the basics. So let's just start out, for example, in Apple, we have opening price, the previous close, the days range, low and high, and the 52-week range. And these are not actually stats. They're kind of just giving you an idea in your head, like where the price, where the range of prices were on the day. And then you have a 52-week high and low. And let me take you to a different page where it kind of breaks down these numbers, because you probably see these, right? You'll see these almost on any website. You'll go to Yahoo Finance, they'll show you previous close, opening price, low, high. So they'll give you that data, and then it's up to you what you want to do with that data. If you want to perform analysis, I think you could even, on Yahoo Finance, these 4 numbers, you could go and download them. So they'll give you like a history. Well, I think they'll give you open, high, low, close, and then they'll do an adjusted close based on splits and dividends. Is that correct? Well, we could go really quickly. Maybe I'll just go to Yahoo Finance just to make sure I'm correct. But I believe they let you even download this data. So what do you do with the data, right? If you could, I guess, draw yourself a chart, or you could start creating some analysis on that data. But I just want to make sure I point this out. So here you could go to historical data, and then you can see here, open, high, low, close, then they do an adjusted close, and they give you the volume. So these are like just basic numbers. You don't get intraday stats, but you could start there. So one thing we could do is just take a look at that price action. And I'm just using this data. Let me see, actually, sorry. Let me go to trading hours. Let's do by hour. And here we could kind of see what the stock has tended to do, right? So we're going to take a look at the distribution of returns, the volatility, and the ranges in the last 20 days, just to set our expectations what Apple tends to do. Okay, so here we could see, if we use the last 20 days data, that on average, if we just took the opening gaps, on average, Apple was down 0.17%. Okay, so it's down a little bit, meaning that if you did a trade at the end of the day, put on the position, bought Apple at the close of the day, and then got out of it at the opening the next morning, on average, you lost 0.17%, per day. And this is telling us that 52% of the time in the last 20 days, Apple gapped lower or opened lower, 48% higher. Okay, so this was yesterday. This wasn't the average. This was yesterday. This is the average. So we could come down here and just kind of see how it tended to behave. And we see that, at least right now, I'm seeing a trend that has been opening lower more often, all right? So this is kind of just letting us know quickly how it's been behaving. And we see here, 52% of the time open lower, 48% of the time it opened higher. But this average is positive. So it's telling me when it opened higher, the magnitude of the up moves were higher than the magnitude of the down moves on average. Okay. Then we could take a look at its stats from the open to the high of the day. All right, so on average, from the opening price to the high of the day, we see it gained 0.87%. From the open to the low, lost 0.62%. So now I'm just painting a picture that, from the opening, the magnitude of the moves to the upside exceeded the magnitude of the moves to the downside. From that perspective, it favors a little bit towards towards the upside. From the open to the close, on average, it gained 0.21%. So what this is telling me is that the drift, if you're just playing to the upside, that the drift on average did better than the gaps. However, what about the frequency of the moves? 59% of the time from the open to the close, it was lower, 41% it was higher. So using all three of these stats, this is letting me know that more often than not, it finished lower, but the times it finished higher, right? If you held it all the way through, that on average, those magnitudes of the move to the upside exceeded the ones to the downside. So we could come down here and kind of see that data. So we see, here, even though it drifted lower, it was very small, but the times it drifted higher, it was very big. And these are just stats, keeping in mind, like if you're doing something in the morning and you're not seeing news, you're not seeing big effects on the market, and you're just looking at these stats as guidance, right? These are just guidance of the ranges of the moves, the magnitude of the moves, the potential risks and rewards. That's just one way of looking at something statistically. Does that make sense to people?
Seems to make sense. No comments about it yet.
Okay. All right. So I'm going to come back here. Just briefly, just wanted to show you that, but I'm going to come back to the summary. So here we talked about the trading stats. Here, what about the volume? So the volume, we could just, from the very top level, all right, I'm not going to go in right today. I don't have time to break down all the volume that's within the day, but at the top level, we could just take a look at how much stock volume was on a day, so 60 million. If we compare that to a benchmark, because we don't know is that high or low, so we need to establish some kind of benchmark. So if we take on an average daily volume in the last 90 days, it traded 95 million. We see on a relative basis, this is on the low, it's below average, right, on the low end. Same thing with the options volume. How much contracts did Apple options trade yesterday? About 1.26 million. Is that high or low? We establish a benchmark, 90-day average, 1.38 million. So we can see here, that's below average. So it's on the lighter side, not as busy, as it is if we compare it to the average. Volatility. Well, how volatile is the stock? So we could measure it yesterday. We see 7.8 if we use, open, high, low, close volatility formula. In the last 20 days, its volatility was 16.7. In the last 52 weeks, 33.7. So I could see here it's been trending lower. And that's its realized volatility, historical. What are the options traders pricing in going forward? So that's the 30-day IV. This is what the options traders think the average volatility going forward the next 30 days is 19.9. So now we have all these stats to compare. If we wanted to look at the options and we thought, well, 19.9, is that low, high, or is it reasonable? Obviously, that's below the 52-week historical volatility, the realized, but we see that it has been trending lower in the last 20 days. Yesterday, very low. So, 19.9 is still above the last 20 days and yesterday, but well below the 52 weeks. So it might be reasonable unless you could find a catalyst, unless you think it might continue lower to these numbers, or it could come back up to here potentially, but you'll need to find a reason, right? Finding that story, that's up to you. You got to do your research, right? You could see, do they have any upcoming events that could make it move? You know, what are other stocks in a similar situation doing? I know Apple, I think right now they're going through, there's going to be some headlines with regulatory. They want to start regulating some of these bigger companies like Apple, Google. If you think that's going to create volatility, then this might be an opportunity, right? Like, well, you've been reading about the Apple, I think Google, Amazon. I know they're up there in Washington battling now.
Yeah, there are potentially regulatory issues coming down, that's for sure.
Right. So if you follow closely, if you think that could potentially create, a volatility shock, right? You're trying to anticipate what the headlines might be.
Hey, D, it sounds like you've gone back into the fishbowl. You may have to log out and come back in.
Okay. Log out.
Yep.
Okay. You do that. Right.
I'm assuming everyone was hearing Dimitri that way. Apologies. Thanks everyone for joining. I want to thank a special thanks to Gene, who stepped up and was live on the show for the first time. Thanks again, Gene. Thanks for joining everyone. Albert, I do see your question. I don't know if you want to come on live. I think that question may have been answered by a couple chameleons. I'm not 100% sure what you're asking, but if you want to come on live, I put the link in the chat. I'll put it in again, and you can come over to the Zoom and ask that question. Looks like D, are you back? D is back. Are you back, D?
Yeah. Can you hear me okay?
Perfect. Yep, you're good.
All right. Let me share my screen. So I'll just continue. Let me know if there are any questions, if somebody didn't hear anything, but I kind of went over some basic stats based on stock price analysis, the volume, and volatility. Other, information here that could be important are any upcoming events. If you're looking to do an options trade or a stock trade, you kind of want to be aware of what's coming up on the horizon. It could be an earnings event. It could be a corporate event. Certainly government economic events could impact it. We just mentioned Apple. Right now, that happens to be one of the big tech stocks that is now going up. Things are going on with regulatory that could change, things going forward, dividend. So those are things you have to keep in mind and how that might impact the stock or the volatility. Then I'm going to come down here, if there are no questions, and look how different ways we could analyze the price action. So we just kind of looked at Apple versus itself, right? So these are stats based on benchmarks that we're using versus its own historical benchmarks. But you could also compare Apple to peers, industry, or relative to the rest of the market. So here we're comparing it to the rest of the market, where we're using SPY as the benchmark, as the market proxy, the S&P 500. And this will let us know on a relative basis how has Apple been doing. So we see yesterday underperformed the market a little bit. In the 2-week period, Apple has outperformed the market. Apple's up 5.2%, S&P 500 up 0.6. On a 1-month basis, Apple's up 6.6%, SPY up 2.2. 3-month basis, outperformed. 6-month, underperformed. And we use these benchmarks. It's important because, going forward, whenever you're doing your analytics, right, what you're trying to do is, well, why, if I'm anticipating some type of return in investing in the market, whatever it is, let's say 3 or 4% or 5%, 10%, whatever your estimate is in the market, why would I hop out of that investment? Why do I take out some of my money out of here, which is well diversified, 500 of the biggest stocks, You have some of them might go down, some go up. You're well diversified. Why would I get out of that investment and hop into a single stock? Well, your expectation is then that your return will be better, right? So the only reason for you to come out of SPY into a stock is that you think that you're going to make more money. Your return on your investment will be better. And not only will your return be better, but it'll be better on a risk-adjusted level. So what do I mean by that is this. Let's assume that in SPY, I think, and I'm making numbers up, let's say in the next year, I think I have a potential to make 10%. But what do I think my downside risk is? Let's just say, there are different ways to estimate it. So I might just give some examples, but let's just say you want to compare it to, well, what do I think I have at risk? Because it's not riskless, 10%. The market could go down. What do you think the market could go down potentially by? And there are different ways to maybe try to estimate that. One way that's been historically popular is just using the volatility of the stock, or historically the biggest 1 year downdraft, drawdown. So what is its biggest move over a year period to the downside, for example? Or you could do like a range, like in a month period, whatever it is, and then compare it to the stock. Or you could look at the options market. But the idea is this: if I'm expected to make, if I think I could potentially make 10% in SPY, what do I think I'm losing my potential downside risk in a year? Let's say 20%, right? So just to make the calculation easier, for every dollar I think I expect to make, I'm potentially could lose $2, right? Here, then, well, what about an Apple? So let's say an Apple, well, I think that I could make 15%. So the potential return is higher than 10%. But if I think that based on some of the risks that I see, coming up with, I don't know, and I'm making this up, I'm making these numbers up, like regulation or competition, or, maybe risks in China, whatever it is, I think that the potential risk is down 50%. Well, then it might not be worth, for that extra 5% that you think you're making, you're taking on too much risk, and you're better off on a risk-adjusted basis still staying in SPY. Does that make sense to people? Hopefully. So you're weighing in your potential reward versus your potential risks. So we're seeing, is it outperforming on a relative basis? Right now, yes. Do we think it's going to outperform going forward? And what do we think our potential risk is? And one way we can look is potential in the options, like how much does it cost me to hedge the risk? So I'll give you an example here. I could go here to risk premiums, and how much. I'm going to go here. This is looking at options with different maturities. It's creating a synthetic based on the option prices. And how much does it cost me to hedge risks out 120 days? Well, if I buy that at the money put, that's going to cost me 5.45% in premium relative to the stock price. Okay, and I could compare that to SPY and say, well, how much does it cost in SPY? Well, in SPY, same $3.29. So, 3.29%. So you do the math, not quite 2 times as much, but we could use the options. You could use the volatility. There's no one way, you have the data in front of you to kind of estimate what you think your potential downside risk is, how much does it cost to hedge the downside risk, and then figure out, well, what I think my potential upside is. Is it worth moving out of SPY into Apple? So hopefully, I'm just doing introductions here, but hopefully these things are making sense.
That looks good. People are psyched about it, D.
Okay. So Now I'm going to move a little bit further, okay, and say this is looking at a relative performance, and we have to give it a time period. So this is looking at the last 2 weeks. This is looking at a month. This is looking at 3 months. So in this time period, right, let's say over 3-month period, Apple gained 8.9%. And, oh wait, I'm on SPY, sorry. Let me come back to Apple. I'm back on Apple. So in this 3-month period, Apple gained 9.3%, SPY gained 8.9%. What we want to do at this point is maybe take it a little bit further and say, okay, that could have been mostly to a 1-day outsides move, right? So it could have been where maybe Apple went up a lot one day. Let's say they got awarded a contract or whatever, they won a lawsuit. Apple went up really big that one day. And then since then, it's kind of been underperforming, drifting lower, right? So you won't be able to tell that just from looking at this number, because that one day is kind of just embedded in there. And you're not sure from day to day, how's the stock doing relative to the rest of the market. So in order to do that, we want to take a look at the daily statistics. Okay, so on average, from day to day, how's Apple performing versus the rest of the market? Okay, so that's coming here to a relative strength day to day. And you have breaking down last 15 days, 30 days, 90 days. So let's just start out last 15 days. So one way we could take a look at is in the last 15 trading days, how many of those days did Apple move higher and versus how many days it was lower? And how many of those days in the last same 15 days did the rest of the market move higher versus lower? So we could see here that in the last 15 days, Apple closed higher 67% of the time, 67% of the days, versus the rest of the market, only 47%. So from that perspective, we see that Apple is closing higher more frequently than the rest of the market, which on a relative basis, that's more positive. What about the average return? All right, so we're looking at average daily returns. In other words, if I reset every day, my Apple bet to say I only want to at any one point from day to day, I just want to risk $1,000 in notion. So in other words, if Apple went up, I bought $1,000 of Apple, it went up, now it's worth $1,100. I'd have to sell some Apple stock to get back to $1,000 in risk and notional. If the stock went down, I invested $1,000. Now my investment's worth $900. I have to put in another $100 worth to buy Apple stock. So I'm consistently from day to day, I only have $1,000 worth of Apple. So same thing in SPY. So from day to day, okay, from day to day, what would my return be on my investment on average? And why are we doing this? Because even though Apple might be up more often than SPY, the problem is that if it's up by very little, right? And when SPY is up, it's up by a lot, it could still be underperforming, right? Even though it's up more frequently, right? It's what are the percentage moves is what we want to see. So on average, day to day, in the last 15 days, Apple was gained 0.45% versus SPY 0.6%. So from that perspective, that's better, more positive for Apple than the rest of the market. Well, what about the risk we're taking? So we looked at it and we're like, okay, we're up more frequently on average. It gained more per day than the rest of the market. What about the risk, daily risk? Because even though I gained a lot, but if it's fluctuating like crazy, up 20%, down 15%, up 50%, down 40. There's a lot of risk in there, right? There's a lot of liquidity risks. So then let's take a look at its standard deviation around the returns. How much volatility is there? So we see Apple standard deviation 1.1%, SPY 0.64%. So there is more volatility around the returns. It's fluctuating more from day to day than the rest of the market. So is that worth this extra risk, worth the return? So that's what we do. We take the average return divided by the risk to get this Sharpe ratio for Apple. So for how much return are we getting for each unit of risk? That's this. How much return are we getting in SPY for each unit of risk? It's 9.3. So clearly here, Apple's returns, as you know, risk adjusted, have been better in the last 15 days than S&P 500. Again, I'm going to stop here. I'm just kind of giving you a very basic introduction how you could start using statistical analysis to quantify things, to start helping you make, you know, more informed decisions.
Great job, D. Robert ends with, "This is great stuff. We need to continue the discussion on these trade stats." He loved it. So awesome job, buddy.
Thanks, everyone.
Sorry, I have a little bit of a cold. Everyone, a thumbs up is always appreciated. I know I say that only about once a month. Probably should say it more. Great job, Dean, as always. The Chameleons and myself get so much out of this. You're doing a great job. Thank you.
Thanks, everyone. Well, thanks for joining. Stay safe out there. Hope you guys have a great trading day, and hope to see you guys tomorrow.
We actually have a chameleon who may be coming on, Albert, tomorrow. He's got a question about decay. So tomorrow we may have a live voice on. Everyone, thank you so much. Great.